Welcome to Lickin' on Lending, the podcast that dives deep into the heart of the mortgage industry. Your host, David Lickin, bringing you the latest insights, trends, and updates from the world of mortgages. Whether you're a seasoned industry veteran or just getting started, this show is your go-to source for all things mortgage. Let's get started. This is Lickin' on Lending. Now your host, David Lickin.
Listeners, I'm back with another topic that's real hot on the minds and hearts of a lot of people, and that is crypto. We all know it is a part of our world, our new world. Crypto is moving through and getting a lot of attention. If you put in Trump announces U.S. crypto reserve, you start looking at anything Trump and crypto, you see all kinds of things searching around or going around the internet and all kinds of opinions, different ways. Joining me today on the podcast, I'm privileged to have Lee Bratcher here. I was introduced to Lee by our dear friend and sponsor, Pavan Agarwal of Angel AI. Lee, good to have you on the podcast. Thanks so much for joining me.
Yeah, thanks for having me, David. Looking forward to the conversation.
Well, I think, first of all, we should kind of let our audience get to know you a little bit. I was looking at one of your other podcasts you've done, and I was privileged to get real insights. I love the fact that you have a PhD, but let's talk about your journey to get you where you're at today. If you could run through it real quickly.
Sure. Yeah, out of college, I went to the military officer candidacy school at Fort Benning and did that for quite a while, and then transitioned to the reserves. As a reserve officer, I was supporting Army Futures Command as an innovation scout, sort of a tech scout, if you will. And during that time, I'd been doing some graduate work, like you mentioned, and got a PhD, and my dissertation was around blockchain and property rights. First, it was around property rights. Then I read the Bitcoin white paper and discovered digital property rights, and decided, hey, I'm going to dedicate my career to this. And at first, I thought maybe that's as an academic, but you know as well as I, their innovation and academia do not go hand in hand. And I knew I had to get out of there. So I started the Texas Blockchain Council in 2019 as a side hustle while I was a professor, but I was sort of a liaison between elected officials and policymakers and regulators and the crypto industry, because back then the industry was a little bit rough around the edges. There weren't very many people that were comfortable talking to elected officials or policymakers. It's gotten a lot better since then, but that's how I ended up running the TBC.
Well, that's good. So tell us a little bit about TBC, Texas Blockchain Council. Very interesting.
Yeah, it's a nonprofit trade association. So a little bit different. It's not a charity nonprofit. It is a similar to a chamber of commerce or like the NFL or these kinds of entities that they're not necessarily tax deductible. Like you can't donate to them per se. You can get involved in politics. So it's a 501c6 entity.
So 6. Okay.
So we make money through membership dues, through throwing events and conferences and sponsorships and things of that nature. And our main goal is to make Texas the jurisdiction of choice for Bitcoin, blockchain, and digital assets. And we've passed several pieces of legislation over the years. We've sued the federal government several times when they've overreached, especially during the Biden administration. Yeah. That's not necessarily like a political statement on the administration as a whole, but it is a pretty, not a well-kept secret, if you will, that they were very unfriendly to digital assets and to crypto. And obviously there were some own goals on our part as the industry with FTX and Sam Bankman-Fried and some massive frauds that painted the industry in a really bad light. So there's a lot of damage control that we had to do around that too. So never a dull moment.
This is fast evolving. It's moving at the speed of light, how fast things are moving around here. And there's some significant issues. What Trump has established is the stable coin. I want to get into talking about that a little bit, but set us up for how we got to the need for the stable coin and what's kind of a history within the political environment where we're at, and why is there so many different currents right now within the whole crypto space?
Yeah, well, it's very permissionless, right? So anybody can start a project, people can fork Bitcoin or take the code base and do their own project. So there's way too many different cryptocurrencies, right? There's
Right.
many thousands of them that provide zero value and that are going to zero. And that'd be the first thing that anybody who knows the industry should tell you is that if you're investing in this space, and this of course is not investment advice, but my opinion is many of these assets are going to zero. Bitcoin is not one of them. It is the gold standard and is about 70% of the market cap of the entire industry. And so it is in a category wholly of its own. And then you've got stable coins that you mentioned, which is a unique asset that it does not move up or down. It's not, it's set stable to the value of the dollar because someone takes a dollar, they give it to a custodian like BNY Mellon, and there's an issuer like Circle or Tether who then gives that person a stable coin, and it's always redeemable for $1. So you're not investing in stable coins, you're using stable coins as a payments tool. Go ahead. Yeah.
And that's got that brings up some, it's really interesting, by the way. I'm going to do a little side note to our listeners. Trump's goal is to make the U.S. the crypto capital of the world. And we've already kind of started out there with Bitcoin. I have one question on Bitcoin. Why is it become the gold standard?
Well,
interesting use of words.
Yeah, and I do use those words purposely because it is sort of digital gold, if you will. It's a scarce asset. So it has the properties of money that many of the other cryptocurrencies don't have, right? It is scarce, so it's capped at 21 million. And that's the key property for money, right? You have to have a scarce asset. Like gold was money for millennia because it was scarce. And it has to be divisible. It has to be fungible. There's all these properties of money that Bitcoin checks all the boxes. Oftentimes it checks them better than the US dollar. Now, Bitcoin's not competing with the dollar. Maybe it does in 20, 30 years for the...
Yeah, not yet. I was going to say not
yet. But, the dollar is not scarce. The
right.
Purchasing power of the dollar has decreased by 97% since 1903. So in the last 100 plus years. And if you look at M2 and the money supply, David, you probably are looking at these charts all the time. We've printed more than half of the dollars in circulation since, in my lifetime, certainly since the Iraq War, and a third of the dollars in circulation since COVID. So not a great last couple of decades for scarcity of the U.S. dollar. So
it's a real problem with inflation and many other things sets us up.
It does. Yeah.
Yeah. So when we're looking at some of the recent trends that are going on right now, as far as I'm more interested in the regulatory world right at the moment. I think isn't that where you're playing more of, is playing an advisor in the regulatory world? That's more of your expertise and contribution to what's going on, if I understand correctly, Lee. Is that?
That's right. Yeah, we work on policy at both the state and federal level, and passed several bills here in Texas. Most recently, the Texas Strategic Bitcoin Reserve Bill.
Yes, that was interesting.
Yeah. So Texas is going to
Pavon had a little bit to do, had something to do with that in there, if I understand correctly.
Who did?
Pavon.
Pavon Agrawal has been a great supporter of the TBC for many years. And he is, if you don't know him, you should look him up, a visionary leader, both in AI, banking, and digital assets. And so with his support and many other member companies, we've been able to garner influence in the Texas legislature. And we passed a bill alongside Senator Schwartner and Senator and House member Chairman Capriglione. And this bill would see Texas, and the governor will sign it in the next couple of weeks, from what he's told me. We don't expect him to veto it. It'll create a strategic Bitcoin reserve for Texas. And now, obviously, Texas is the 8th largest economy in the world if it were a country. It's bigger than Canada, bigger than many European economies. So we're pretty excited about what this means for the state.
One of the things that I'm reading is this really creates some potential disruption for the visas of the world when you can start transacting and doing the amount of transactions in a way that there's a lot of people that have had their hand out collecting a tariff, if you will, or some revenue.
Yeah, rent seeking maybe.
Yeah. So, I mean, this is going to change the banking relationships. Has a lot of disruptive, good qualities and potentials to it, which I think is ultimately good for us. Is it not, Lee?
Absolutely. Yeah. We want to see innovation and disruption because that's how we make things cheaper for society. We increase human flourishing. I mean, payments back in the day could take a significant portion of the transaction if it was over time and space. Obviously, you've had bearer instruments to make payments for in-person transactions for many centuries and millennia, but that doesn't work in the 21st century. We need payments that are instant and that work on the rails of the internet. And Visa is actually getting involved, as is MasterCard, in the stablecoin world. So stablecoins are the portion of the industry that are really disrupting payments. And you can see why, because they are stable, they're cheap. You can send millions of dollars in a matter of seconds for fees less than $1, right? Fees in the cents rather than dollars. And of course, Visa charges, typically 3% on transactions. If it's a large transaction, that could be a lot of money. And they clear a lot of volume, but your audience will be interested in this fact. You can go on Visa's stablecoin tracker. So Visa, lots of firms do this, but Visa also tracks the volume of stablecoins. They look at the blockchain and see from a year-to-year basis, even from a month-to-month basis, what kind of volume there is on stablecoins. And stablecoins did more volume in 2024 than Visa and MasterCard combined.
Wow. Now, I would think they would see this as a threat. If you're doing a true SWOT analysis, this has got to have a huge T threat to them and their business model. How are they getting involved? And how does this all play out? Or are they going to try to mess it up?
Well, it is a huge threat to them. And so they're taking the same tack that, Facebook did with Instagram, right? They just bought them. Yeah. So Visa and MasterCard, while they probably can't afford to buy Circle, which is the second largest issuer, it just IPO'd last week and opened up, 300% up since the IPO, I think is the number. So that's a multi-billion-dollar company, and maybe Visa could probably buy it, but it would be extremely difficult to buy a company of that size. So what they're doing instead is they're partnering, and they're doing joint ventures and making investments, and so making it so that they win when these other companies win too. And that's a smart way to do it. It's a very capitalistic way to do it, and it allows for the innovation. They're not just going to buy the companies and kill them and kill the idea. Thankfully, in this space, that really wouldn't work because then just another one would pop up.
Right. Exactly.
There's not like the moat to creating a stablecoin company is not that high. Although the challenge of creating a large stablecoin company is very high because it works like network effects. So you're going to have one or two or three large stablecoin companies and then 100 others that you'd never heard of in 10 years, right? So you do need those network effects. So Tether and Circle being the largest two have a leg up on everybody else, and they will do a lot of deals with Visa and MasterCard.
I know we don't offer investment advice on this, but is Circle got some serious upside yet? Do you think? Is it like buying Bitcoin when it was at that earliest days?
I don't know. I would have said so before the IPO, but maybe the market's already got that priced in because again, it's up 3x in a week.
Yeah.
And that doesn't happen too often with IPOs these days.
No, it doesn't. It's usually the other direction. It peaks shortly in the first week and then it's down from there. Really interesting. Well, what does this do to our banking system? Let's talk about generally banks, because I understand they're looking at this with a certain amount of nervousness as well.
Yeah, and they should, right? The banking system is a core part of the U.S. economy. And for that reason, we need to sort of protect the banking industry. It's almost like a utility of sorts because everyone needs to have access to financial services. But at the same time, we need to pressure the banks to innovate a little bit too. So it's a delicate balance. And what we're doing right now with the stablecoin legislation that's moving through Congress that actually just got a vote in the Senate, and they got the votes that they needed to move it forward.
Was that yesterday or today?
Yesterday, yeah, the Genius Act.
The Genius Act, that's right. That was yesterday.
So it passed a key procedural hurdle and got over 60 votes. So there's Democrats on that bill. They moved past the filibuster threat risk of that 60 threshold, and so that bill is probably going to pass. But what's interesting is the banking lobby has in that bill inserted language that says stablecoins cannot provide yield to their holders. And right now, what happens is a stablecoin goes into BNY Mellon, the issuer, Tether or Circle or whoever it is, they make a treasury yield because they buy short-term T-bills, and they're making 4% and change, whatever the short-term treasury rate is on that particular day. And so they're making, I mean, Tether is the most profitable company in the world per capita, like per employee.
Wow.
There are no, I mean, they only have like 50 employees, and their profits, not their revenue, but their profits is in the many billions of dollars. They're a private company, and so on a per employee basis, they're the most profitable company in the world. Now, the Genius Act prohibits stablecoin issuers from passing that revenue on to consumers. And the reason why is because then why would you need a bank account? You would just hold your dollars in stablecoins and you make 4% like a high interest savings account. And you could spend it within seconds and send it anywhere in the world. I mean, that is compelling.
Yes, it is.
So the banks are going to get involved really quickly, as they should. I think we can't let the banks, we don't want to create an environment where deposits are just flowing out of banks. That's a scary environment.
Mediation, we do not need that. Yeah, exactly right.
Yeah, so I think there's a healthy level of compromise in the Genius Act. It still forces the banks to innovate, but doesn't create a scenario where there's risk for them.
So is there going to be a dividing line of the haves and have-nots when it comes to the banking? Those that are going to step press into this, and others that just are laggards are going to find themselves basically out of business?
I would say so, and I'd say for two reasons. One, because of the innovation that we've been discussing, right? The other reason is actually more political. It relates to the implicit guarantee for the GSIB banks, right? The Bank of America, the Wells Fargo's of the world. They have the implicit guarantee of the federal government, so they don't have to pay interest on their deposits. If you're probably well aware of this. It's a big pain point for a lot of the regional banks. The regional banks are having to pay 4%, and Bank of America can pay 0.04%. And that's just an unfair advantage. So I think that's probably a much larger driver in the short term concerning for regional banks.
Or the regional banks. But the bank that JP Diamond's, Chase is, and they're obviously one of the banks that are a big part of the system. What should we be considering as we're looking this bill move through, the Genius bill move through the legal proceedings? What should we be really considering? What are the ramifications of this, Lee?
Yeah, the CEO of Bank of America actually announced that they're doing stablecoin. Jamie Dimon has had 400 people working on blockchain and crypto. It's kind of watch what I'm doing, not what I'm saying, right? He's obviously been very bearish on Bitcoin and crypto, but he has an entire division working on it, and so they're very. I mean, I know a lot of people at JP Morgan. They're very sharp on digital assets, so they see where the puck is headed. They're skating there, and I don't think they're going to be left behind for a lot of reasons.
Yeah. What is the major disruptors? We're in the mortgage world here. This is kind of not directly related to the mortgage world, but we do a lot with banks. And most of the credit facilities, independent mortgage bankers are the regional banks or even some of the large national banks. And how does this change our world? Do a quick SWOT for us, if you wouldn't mind.
Yeah, in the mortgage world, I'd say what we're looking at right now is tokenization of real world assets. And real estate is obviously a prime asset to tokenize because it's illiquid and there's high transaction fees. And so, and there's also title fees and all sorts of things. So the United States has a very high cost of transaction, and it's not really related to the mortgage side. It's related to some of the other pieces in that transaction, that you guys are very familiar with, right? The realtor fees and title and all sorts of stuff. Now, I'm not saying blockchain is going to make that all go away, but what I am saying is things are going to get more efficient. They need to get more efficient. And so if you're on the cutting edge of that efficiency, you can gain market share. If you're not, then you won't. It's the same thing as like there used to be internet companies, and now there's just companies. If you don't use the internet, you're probably not a company anymore, right? So In the 90s, you could say, hey, we're an internet company. But in 2010, if you're not an internet company, that something's weird. So people don't even need to say that anymore. Like everybody's on the internet.
Yeah.
Well, pretty soon, in 10 years, I'm not. I think this is going to hit residential last because the economies of scale aren't really there from a per transaction basis because there's some cost associated with this. But for large transactions, commercial, any like private equity syndication, they're probably going to tokenize the LP interests.
When you for those listeners that didn't understand the term tokenization, explain that just really concisely, if you could, what you mean by the tokenization for those listeners that do not understand what you mean by that.
Sure, yeah, that creates like fractionalized digital ownership rights to an asset. And so when I say tokenize the LP interest, I mean like the LPs in a syndication for, say, like multifamily or commercial property, they are locked up for a while and they have all sorts of liquidity issues, maybe.
Right.
When you tokenize an asset, you can tokenize it and say this building is going to have 100,000 shares, and those are going to move on a blockchain. They can trade in a secondary market. There's price discovery. There's all sorts of things. Now, it's a little complicated because you don't really want to tokenize the GP interest. You also don't want to tokenize more than half of it because then there's some ownership risk. So it's going to take some time to evolve, but there's already buildings, even in Texas, that have already been tokenized. The money market funds are getting tokenized. BlackRock has money market funds that have been tokenized. So they're going to start with tokenizing things that are easiest to tokenize on the capital stack, and that's money market funds. And then it's going to go to like credit, private credit instruments, and then it's going to go to mortgages, and then it's going to go to private equity, and that's when you get into the kind of tokenized LP interests in multifamily or commercial deals.
Well, it's actually, I'm partnered with Alan Weiss of Weiss Analytics, who also was the co-founder of Case-Shiller Weiss, and which has been and we're working together on primarily his brainchild is the tokenization of home equity. So when someone's looking to buy a home, you could actually, or if someone has a home and they're having this, let's say that they're at a place in their life where they have a large equity and they need to be able to, they want to stay in their home. So instead of going out and using a reverse mortgage, you can actually sell interest into your equity of your home, bring in capital without having to sell your home, which it may be at a disadvantaged time. So it's really interesting, the whole tokenization. Pavan and I have talked about that before, but I think there's a lot of development in this space. When you look at Texas as a leader in this space, your Texas Blockchain Council, it's here, and you're playing a lead role, as you said earlier, in much of what's going on across the country. What can we anticipate out of here? I'm a Texan, you're a Texan. We're here. I heard it. I was just listening to a friend of mine up in Amarillo saying they're building a huge facility up in Amarillo now. There's a lot going on in this state when it comes to blockchain, everything that's the crypto markets.
Yeah, there is. And I think you're probably referencing a Bitcoin mining facility up by Amarillo. There is, at any given time, you have about 4% of all power used in the state of Texas is used to mine Bitcoin, which might sound kind of abrupt to some people, but that they're a very unique power user. They're price sensitive, so they're on when power is cheap and they turn off when power is expensive, which is actually a really, really helpful type of load for the grid. It can help with grid stabilization and grid balancing. So
that's a good
it's a very symbiotic relationship with the grid, very helpful, similar to batteries on the supply side, but Bitcoin miners do that on the demand side. So that's creating huge economic changes in rural Texas in particular. 12,000 jobs, which is not a huge number for like Dallas, but that would be a very large number for some of these rural counties where these facilities are coming up and creating 100 jobs here and there. That can change the trajectory of a small town. Even 20 jobs can change the trajectory of a small town. And these are high-paying jobs too. So lots of activity in the Bitcoin mining space in Texas. Of course, capital formation and technology. We're very excited about Dallas and the Texas Stock Exchange. That's going to change the landscape of capital formation in the world probably, but obviously in the United States first. And then Austin, of course, leads the world or leads the United States in kind of technology startup growth. Of course, I say growth because Silicon Valley still leads in like gross numbers of startups and venture capital, but
Right.
The trajectory, it has been growing fastest in Austin in the last couple of years. So lots of good things happening in the state.
Yeah, there's a lot that happening. I live in the Austin area, so we're thrilled to see what's happening. Hopefully that's going to have a chance because we've watched property values kind of take a hit. Lee, I want to just say thank you so much for being here. I mean, what are the things that I'm not asking? I'm trying to stay up on this as much as I can, reading it. But what are the things that I'm not asking that you think our listeners should really know about as we get close to wrapping this up?
I think you've asked some really pertinent questions, so I'll just kind of highlight some of them. I think people should research Bitcoin. It is the most important asset for the 21st century. There are a lot of other assets out there, and perhaps they want to research, who's going to win the smart contract race. Is it going to be Ethereum or Solana or whatever? That should be secondary to researching Bitcoin, right? That's where people should start to understand the revolutionary power of this technology. And then if you're in the payments world, you got to dive into stablecoins. That's a killer app for digital assets. It'll be, the volume is increasing exponentially. And so Visa and MasterCard, I said they did more volume last year than Visa and MasterCard. Stablecoins will probably do double or triple the volume of Visa and MasterCard this next year. I mean, it's just increasing that fast.
Exponential growth, yeah. That meant amazing.
Yeah.
Great. So glad that you're here in Texas. So glad that you're leading the way in much of this. It's an honor to get to know you. Our guest today has been Lee Bratcher, who is the director, the founder of the Texas Blockchain Council. Lee, thank you so much. What an honor to get to know you.
Thanks for having me on, David.
You bet. I give a big shout out to my buddy and good friend, Pavan Agrawal, who is going to be here with us today, but he's gotten tied up on some things. So we just got a chance to get to know Lee ourselves, audience. So it's real privilege.
Pavan's probably got some business deals that he's closing, and he's like, "Hey, I don't have time to jump on a podcast. I'm making a big deal."
I'm making a big amount of money. Again, great to be with you, Lee. Thank you so much. Have a blessed rest of your day. Thank you for being here. You bet. Folks, thank you so much for tuning into this podcast. I hope you enjoyed it as much as I do. There is so much happening in the world of Bitcoin technology. We've got to stay up on it. And I want to say a special thank you to our sponsors who made this possible. Byte Software, Angel AI. We talked a lot about Pavan and Angel AI. Got to check that out. Go to angelai.com or go to askangel.ai to actually use the system. Also, True.ai, another leader in the marketplace, Candid.inc, as well as the Mortgage Bankers Association of America, Lenders One, the Mortgage Collaborative, Modex, Knowledge Coop, Redder, the Mortgage Advisory Tools, and Fuel. Folks, we appreciate you being here. If you like this podcast, please share it with others, download it and share it. We appreciate you. Have a great rest of your day. And again, thank you for being a listener.
You've been listening to Lickin' on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lickin' on Lending.